This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 7/2/21, show number 294. Well, hey, slow she goes for the holiday, but we had great news on the jobs front, didn't we, Nick?
Yeah, we had a big job report today. It looks like the Bureau of Labor Statistics, the BLS, they released a non-farm payroll report for June. It came in a little bit better than expected, 850,000. I think they were expecting 700,000. While this is a little hotter than expectations, the market does not seem phased that the Fed will have to taper or even raise rates down the road. So all things are green light. Everything's a go. Just buy everything. That's where we are. It's also a Friday. Rarely do we see many declines on a Friday. I call this the Friday effect, as you know. And all things look good going into the holiday.
Hey, we had that one bad Friday a couple weeks ago, and I think the powers that be have decided never again. We're not going to let the market go down on a Friday, because if we do, then we have to work twice as hard on Monday and Tuesday to turn the decline around. So we can't have that for sure. But look, if you can believe the numbers, were there any updates to prior months' numbers while we were at it today? Revisions?
There were some revisions, but I don't think they were meaningful. And the one thing I just want to point out about the last time we had a down Friday, remember that was during Options X. That was a quad witching, and we had the Fed President Bullard come out and basically really say that they're ready to go ahead and taper. And then over the weekend, once the market dropped, Jay Powell completely changed his tune and said, oh, no, we're not doing anything like that.
Taper. Yeah, hey, what do you think we are? A bunch of tailors here? We don't taper. We just print, right? I mean,
absolutely.
Isn't that the truth, man? We just print. So, but this is what we expect from the Fed, and I don't believe they're going to disappoint unless they absolutely have to disappoint. So tech-heavy NASDAQ is strong again. We've had some record prices put in by the indices in the past few days, haven't we?
Yeah, the S&P and the NASDAQ have been making new highs today. That is the case again. You have the NASDAQ Composite, though, leading the session today, up about 0.6%. And then you have the NASDAQ 100 up almost 1% today. So tech-heavy NASDAQ Composite and NASDAQ 100 are doing very, very well. And again, this is on the back of lower bond yields. Right after that job report, yields basically trickled down. They were down about 5 basis points today. The 10-year U.S. Treasury Note yield is at 1.43%. And markets love lower yields. That's really what it comes down to.
Hey, let's not forget all of the supplemental unemployment benefits are expiring. They've already been withdrawn in the free states, for lack of a better term. And they're starting to realize, even in the unfree states, that the benefits have to go. There's kind of no choice. And they are going to go because they're going to expire in September no matter what happens. So it might be the voluntarily unemployed's last hurrah this summer. Come September, it's back to work. And I thought it was interesting because one statistic I don't see being fudged is the fact that help wanted ads, 9.2 million jobs was the last number, which is a record. And the jobs are going wanting because too many people have left the job market to soak up the extra stimmies, right?
Yeah, that's been the case for a while now. And, anytime government gets involved, this is what happens. They're very inefficient. I mean, just think about it. Who would pay somebody extra money to not go to work? It's incredible that we're talking about this.
I could tell you who would do that. The same guys who would pay farmers not to plant crops and who would pay factories not to produce products, and basically would pay farmers to produce products of which there's massive surpluses of. The same guys who would subsidize apartments in major cities when there's a shortage of apartments, because they know that subsidies will exacerbate the shortage even worse. I mean, these are the guys who are running the show there in DC and the rest of the country, and you can see the disastrous results forthcoming.
Well, it was always Milton Friedman who said if you put the federal government in charge of the Sahara Desert, in 5 years there'd be a shortage of sand. demand. And that pretty much sums it up.
Yeah, and if well, they are in charge of manure, and eventually we'll have a shortage of that too. But there's no shortage of manure in Washington, D.C., Nick. Hey, so what about Bitcoin? What is our cryptocurrency sector doing today? I know you don't own it, you don't want to own it, but if you've wound up jumping on the cryptocurrency carousel, then this is important to you.
Yeah, today Bitcoin is trading slightly higher. It's really not having a terrific day. It's up about 0.6%, trading at around 33,200. Pattern in Bitcoin is very, very interesting. And I think it's a pattern everyone should take note of because it's very, very weak. It's forming bearish consolidation on the daily chart, and it's weaving in and above and below its 200-day moving average. This is not a pattern of strength. And ultimately, I think Bitcoin is headed lower, but it's still living to fight another day. So there's still a chance here. But I got to say, it's under its 200-day moving average, under its 50-day moving average by a ton. And this is not a pattern of strength. So I think traders got to be a little bit careful here about the commitments into this cryptocurrency.
Yeah, well, it's like any other market, even though I know you guys don't want to believe it. Cryptocurrency is the same thing. The only difference is that there is no limit to the amount of cryptocurrencies that can be created. There might be limits to how many units of Bitcoin there can be, but there is no limit to the number of currencies, so-called currencies, and they're not currencies. They're assets at best. And there could be Dogecoin 1 through 1,000. There's already 3 or 4 things named Bitcoin from forks that have occurred. And really, that's all you need to know. Not to say that I believe it'll go up again, Nick. I think it'll whack people out, go down maybe to, like you said, 6,000. That would be a nice number. And then it's going to turn around and do exactly what it's done all along 7 times before, Nick, because people keep buying it because everybody wants to believe, Nick.
Well, I mean, if you look at it, there's ways to look at Bitcoin. You can look at it as an asset class. You could look at it as a potential currency. Obviously, it's very volatile and doesn't make it viable as a currency. I mean, you could buy something with it one day and the next day it could be down 20%. I just don't know if that's a viable currency. But, people are looking at all of the stimulus money that is being printed by the central bankers. And that's really what it comes down to. This is really, an alternative as people look at it. I don't feel that way. I'd rather own a precious metal like gold and silver. But, that's what people think that, hey, I'm going to own Bitcoin and it's an alternative to the dollar because the central banks, and it's not just the Federal Reserve, it's the European Central Bank, it's other central banks, Bank of Japan, others around the world. They are just printing money, unprecedented. We've never seen this before. This is QE unlimited. And that's really what gives Bitcoin its shine, really.
Oh, absolutely. And, you just look at it and you could just see the handwriting on the wall here, Nick. But that's not to say it's not going to come back again. It is. It's going to keep coming back until it's either outlawed or until the powers that be do such a number on it that no one will ever trust it again. And trust me, they've got a number of ways they can do that. Hey, finally, since it's Friday, let's take a look at gold and silver. They're having a pretty good day today.
Yeah, gold is having a very, very good day today. In fact, GLD is up $1.46. Gold futures, as we speak, are up $14.90. So really good session there for gold. And silver's having another good day, up about 2%. So they have a lot of work to do. There was some damage done during Options X in the precious metals, but they're rebounding a little bit here. So it's going to be interesting to see how this pattern starts to shape out. The weekly pattern has a lot of work to do still, but good day today.
All right, and that's what we want to hear. So precious metals, we're still in an uptrend, right?
Precious metals overall on the larger time frame are in an uptrend. On the smaller time frame, the daily chart, they are not in an uptrend. The daily chart, they are below the 200-day. Gold is below the 200-day moving average. It's also below its 50-day moving average, which puts it in a weak technical position. And there's a fair possibility to go down and test the March lows. However, with that being said, if it recaptures those moving averages, and by the way, the 50-day and the 200-day moving average are both sitting right around 1832. If they recapture those moving averages, then there's a chance that, gold could recover. But right now, it's still in a fragile position, and you got to be a little bit careful with it.
All right. And you should be careful anyway. I say if you are going to acquire physical bullion, don't buy it all at once. Spread out your purchases over a number of months and either average up, the price is going up, or you average down. And if you average down, you'll be happy. If you average up, well, at least you're buying something that's going up. Either way, don't go buy it all at once, because that's how you really get burned. Same with stocks. Often when you're acquiring or accumulating a stock, you might not want to buy it all at once. You might want to look for key movements. I think we'll leave it at that, Nick. And hey, questions, comments, KL@KerryLutz.com. Make sure you go over to Nick's site, InTheMoneyStocks.com, and find out how Nick has done it all these years, over 2 decades. And check out the Twitter feeds at ITMS, at Nick Santiago 01, and at Kerry Lutz. Nick, have a great weekend. We'll talk to you either Tuesday or Wednesday.
Thank you, Kerry. Have a great weekend.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, InTheMoneyStocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago 01.